Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that the market held the 52.75 to 54.75 area, which marks the short-term balance area high that the market broke out above yesterday, and buyers can maintain short-term control as long as they're holding ES above the 52.75 to 54.75 zone. Now, given the upside that we've seen in the overnight session, ideally the market holds above yesterday's high at 59.75. So holding above 59.75 would serve as a confirmation that the buyers are continuing to be dominant. And holding above 59.75 could lead to a move into the 67 and 67.5 area. We have a naked VPOC and open gap there, and the 68.5 to 70.5 initial resistance. So above 59.75, the main upside objective today will be the naked VPOC and gap and the initial resistance zone at 68.5 to 70.5, where responsive sellers can then step in. Beyond that, we have resistance at 73 to 74.5, and that marks the 2-week high, and that zone has potential to cap the upside on the day. On the downside, we have some support at the previous VPOC at 56.5, and then 52.75 to 54.75 is the main support area on the day. If the buy side is really dominant, then we may not even get a move back down towards initial support. So if the buyers are going to continue to be quite dominant, then ideally we see the market holding above yesterday's high, or at least above the previous VPOC of 56.5. But as long as we're holding above 52.75 to 54.75, then that short-term balance breakout can remain intact. And a break below the 52.75 area would put that breakout into question, but buyers can still be active at 47.75 to 49.75, especially if ES is exhausted into it. And then below that, we have support at 42.75 to 44.75, which has potential to cap the downside. So given that today marks the last day of the month, and then we have the non-farm payroll report out tomorrow, it is more likely that the market will balance within a range today. And off the open and heading into today, we are going to be assessing where that range could take place. If we are seeing sustained upside momentum and the market's holding above 59.75, then we could tag initial resistance and then start balancing. If we're seeing excess bullishness and continued upside momentum, then maybe we get to 73 to 74.5. But once we start tagging those resistance zones above at 68.5 to 70 and 73 to 74.5, and then given that it's the last day of the month, which typically ends up being a very balanced session, it makes it more likely that responsive sellers will be active at initial resistance and at 73 to 74.5. And in the event that we are seeing a lack of strength or a lack of upside momentum, then perhaps we get a pullback towards 52.75 to 54.75. It's still a spot where buyers can defend. It's the initial support zone and the bull bear zone on the day. And then if we break that zone, buy side can still be active at the support zones below, and then the market can start balancing in a range yet again. So above the initial support zone and above 59.75, we're going to have to exercise caution on the short side unless we're getting good trade location close to the initial resistance zone or at the resistance zones above. And then on the downside, as long as we're not seeing excess bearishness, buyers can still be active at the 56.5 previous VPOC, at the gap fill, and at the initial support zone. And in the event that the market fails at initial support, responsive buyers can still be active at the support areas below, and then we can start developing another intraday trading range. So today we could get opportunities on both the long and short side, and as long as we're getting good trade location, both long and short setups can work, and the only time it would make sense to give up trade location is if you were seeing excess bullishness or excess bearishness in real time. So those are the main ideas heading into the open. Let's see if the buy side can maintain the control that we've seen recently, and we'll take it from there.